Welcome back to the Inside View Real Estate Podcast, guys. Today we're going to talk a very hot topic, and we're going to talk about stocks versus real estate. Stay tuned. Good morning, good afternoon, and good evening. I am your host, Josh Zuniga. This is the Inside View Real Estate Podcast. I am with the stately and stupendous,
God, you're just good at that.
there we go, stupendous, right? Carl Freund. And today we're going to talk about a very, very hot topic. We're going to talk about stocks versus real estate, right? Everybody wants to know about that. Obviously, we know that a lot of wealth has been built within the stock market.
Tons, billions,
right? Tons,
trillions.
Trillions, everything. But also we all know that real estate has a huge mark and is a huge sliver of that as far as anybody's investment portfolio, correct?
Well, yeah, I think real estate should be. I'm kind of biased.
Yeah.
Full disclosure.
He loves both. He loves both.
Full disclosure. I used to be a financial advisor. I used to work for financial firms. Looking at both sides of the spectrum, I think I'm kind of that independent, neutral third party, where I can honestly, give you a good opinion.
This is good. Let's hear it.
There's advantages and disadvantages to both, obviously. I think you should be equally diversified, meaning that, if anything, leaning a little bit more towards real estate. And you had brought up a good point during the break where we had talked about leverage.
Yeah.
And I think that's the big differentiator if you're not sitting on a shitload of cash, right? So one of those situations where you have to put your cash to work, maybe that's best in the stock market, but where you can put your credit to work, and your credit is one of your most valuable assets. Where you can start to put your credit to work is in real estate, because leverage is one of the most fundamental things that you need to understand about financial health. If you leverage up, which you can do very drastically in real estate, like you can put 5% down, 3.5% down. So one of the examples that you gave was like, hey, if I put 10 grand down on a property, that's 400,000, which is 5%. Is that right? 5%? No, 10.
Yeah.
Then you're looking at a massive leverage.
Yeah.
You can't do that in the stock market. You can't buy, for 10 grand, $200,000 worth of assets. It ain't gonna happen. But you can do it in real estate. So for 10 grand, you go out and put 5% down on $200,000 property. That's a huge leverage. It's 20 to 1, right? When you understand that and understand the tax benefits of buying real estate, then you understand why, if you have good credit and you have not a shitload of cash, that's probably the better investment. So you're gonna take 10 grand down, put it on, buy $200,000 worth of assets, which pays you monthly, by the way.
Yes, it does.
Most stocks don't pay you monthly. They might give you quarterly dividends or annual dividends, and that's fine. But usually they just get reinvested. We're talking about an asset that will pay you a percentage based on the 200,000, not the 10,000. That's big. So in an ideal world, what you would do is buy a piece of property, and I would suggest against condos because of the HOA fees. Buy a shitty single-family house, and they tend to have the best returns, right? Buy a single-family house for $200,000 if you got 10 grand in the bank, and live in it for a year or 2 years. Then at some point where you save up enough money down for the next house, turn that house into an investment property. You had mentioned that earlier,
Yes.
right? Very smart, Josh. So then what you can do is get the cash flow that would hopefully pay for the initial mortgage. And maybe if you're even luckier, you can refinance that property before you turn into investment property as a owner-occupied property. If it's built up equity, you can get rid of the mortgage insurance, right? Because if you put just 10 grand down, they're going to charge you mortgage insurance.
Yeah.
If you have 20% equity in the property, you can refinance out of that mortgage insurance and then reduce your payment even more. And it all goes to principal, not going to mortgage insurance and interest, right?
Yeah.
So then you find a tenant that can at least cover the payment plus the taxes plus the insurance and maybe some maintenance. Now you're cash flowing on an investment that was like 10 grand initially, right? And you're also paying off the principal balance. So people that are 25 years old that are listening to this right now, very important concept to understand. If you own that property for 30 years, which is why they give you a 30-year mortgage, so if you buy it when you're 25, it'll be paid off when you're 55. That's important to understand. Then what happens at 55? You can take an early retirement, or 57 and a half, I think, technically. You can cash flow that and live the lifestyle that you've been used to, in perpetuity, because you've got your basically cash flow coming in every single month. It's writing you a check. That's a smart investment. Shit hits the fan, what can you do?
Sell it.
Yeah, you sell it.
Yeah.
So if you have like a one-time expense where you're like, oh shit, Tommy, whatever happened, one of your kids, you need to bail them out, you need 100 grand, you can tap into that equity instantaneously.
Yeah.
It's a very, very important thing to understand. Can you do that in stocks?
Sounds like Carl is more biased, and he's more leveraged on the real estate side, even though he is involved in both.
Look,
You have to be both, right? Because if you have a shitload of cash, you don't want to tie it up in real estate
no, you definitely.
because you can leverage it.
Yeah.
Put your cash to market to work in the real estate market, or I'm sorry, in the stock market, because then you can actually get the dividends. You can grow that. You can do some interesting things with IRAs and 401ks, and you can do some things with Roth IRAs. And a lot of people don't know this, but you can put real estate in a self-directed IRA. So there's some things there you need to understand. You got to have a long-term perspective, and I think millennials don't have this correct.
Yeah.
They're looking a year, 2 years max. You need to be looking 20, 30 years in advance.
Yeah, and guys, I'm going to give you a little bit of background on me a little bit more. So my family has been involved in real estate for the last 30 years. So I grew up watching my dad and my family build portfolios, whether they're doing flips or whether they're actually doing investment properties and so on and so forth. So in the beginning, we talked about leverage. Leverage is one of the biggest things that you can have in real estate. And to give you an example again, so say you have $100,000, right? You can buy $100,000 worth of stock, right? But that same $100,000, if you wanted to say put 20% down on a property, can get you a $500,000 property, right? And then say you actually have an appreciation of 7% on the stocks, right? So you'll get $7,000 at the end of the year. 7%. You'll get $7,000 at the end of the year. So if you actually do that with the $500,000 piece of property, now you're going to actually be making $35,000. Huge difference there, right?
Massive difference.
Massive
And
difference.
there's things you can do there on the property that you can expense out, right? So
Yes.
the property taxes are tax deductible,
Yes. Yeah.
that kind of stuff.
So this is why I like real estate, guys, and this is what my dad told me. Obviously, he had me read Rich Dad Poor Dad and know what's the difference between assets and liabilities, all that kind of stuff, at a very early age. Which, if you haven't read the book, I highly recommend, especially if you're new to investing, you're trying to open your horizons on things. Go do yourself a favor, read that book. It'll give you some really good education that'll just start opening up your brain to a lot of different topics that you didn't know before. Okay. So like you said, I buy a piece of real estate, right? Say it's going to be an investment property, all right? Say my mortgage is $1,500, but within this area, I can actually rent it out for $2,000. Great. So now I'm cash flowing $500, all right? Guess who's paying that? Paying down my mortgage? The tenant, right? Guess now I have tax advantages, and depreciation, right? Exactly for that. And guess what? Now that property is appreciating year over year. On average, before this boom that we're having, Arizona, historically speaking, was between 7 and 9% on average, depending on your area, but that's pretty good. Nationally, it was between 4 and 6, so we were still doing great here within Arizona. So, and you actually have a tangible asset. You can go look at your house, you can go see it, you can feel it, you can smell it. You have ownership of that property. Yes, you have a loan on it with the bank, but as long as you're making the payments, it's still in your control, right?
Yeah,
And
the rates are ridiculously low right now.
exactly, right? It's free money, so you need to take advantage of that. Like with stocks, I'm not saying don't invest in stocks. I'm a big advocate of diversifying your money and putting it in different avenues and seeing which vehicle is actually going to work. And if you have at least 4 or 5 or maybe even 7 of those, you can pivot on each one. If one goes down, great. The other 2 are doing good. We're still doing well, right? Thing with stocks, it's kind of for me when I say is you're putting money in something and you're trusting the company and the people that are advising it and the board and everything that's going to go well and it's going to continue to go up. With real estate, I feel like you have a little bit more control. What would you say on that?
Yeah, absolutely. I mean, because you can do things like upgrades.
Yep.
You can put different tenants in there. You can do things to the property to make it more marketable. So you can Airbnb it. You can short-term rent it. You can long-term rent it. You can get creative with these things. There's so many options in real estate, and God, I can't impress enough the leverage aspect of it. And you nail it. And you were like, I should have brought it up earlier. You got 10 grand. Okay, at 7%, it's what? $700. Sweet. But now it's 10 or 7% on a $200,000 asset is $14,000. That's a shitload of money.
It's a big difference.
It's a big difference.
And even for that can change somebody's life and change somebody's stars. But guess what? Say you did that every 2 years, right? This is how we're talking about long-term investment 20, 30 years down the road. Like with myself, I don't plan on working in the next 10 years.
Hopefully not.
Because I'm going to be smart and very disciplined with my money. By the end of this year, we should have at least 6 properties under the belt, right? And they're all going to be cash flowing. I'm going to live in one of them, so 5, right? And then say you do that every year or every 2 years, you get another one and another one and another one. If you're 25 listening to this podcast, there's no reason by the time you're 40 you should have 10 properties under your belt. At least, right? If you're smart and if you're disciplined and if you have the right people on your side to show you how to do things, hence Carl and Josh Zuniga, we can help you do these things. It's a big thing that we have, like as far as, I don't want to say advantage, but we know the ins and outs. We've been around the game for quite a while and we invest ourselves and we know exactly what would be the best scenario for you. But not everybody has the situation that's going to work for them. So we try and figure out what's going to be your best path, to get where you want to be in the next 5 years, 10 years, 20 years. Don't be worried about the short game. It's not about the short game and like trying to look good and trying to look flashy and you making all this kind of money. You need to think about your family, right? Your family is everything, right?
Absolutely.
And start thinking about the long-term game.
Take action now.
Take action.
Yes.
Absolute action. All righty, guys. That is what we have for stocks versus real estate. If you didn't see that, I think real estate kind of won on that battle. But obviously you want to be smart, you want to diversify your portfolio. But if you have any questions about investing, please feel free to reach out to us. We have Carl, we have Josh, we're the Inside View Real Estate Podcast, and we'll see you next time. Love you.